CNBC TV 18, celebrating 15 years of leadership.
Bulls accelerate on Dalal Street after Mario Draghi's move to inject steroids to lift the Eurozone. The Sensex soars nearly 300 points. Nifty climbs above 8,800 as records tumble for the fourth straight day.
There's a huge amount of curiosity on India. There's a very large amount of investor interest in India.
Global investors excited about India like never before, says the finance minister in an exclusive interview from Davos. Says the disinvestment drive will gather pace. Also depends the slew of duty hikes on petrol and diesel.
India is such a big country. You need to have a natural resource company out of India.
Fourth quarter and the next financial year will be tremendous benefit on many of our businesses.
Being the leading market player, Airtel needs to have more spectrum to serve its customers.
The big wigs of India chart out their growth roadmap. Anil Agarwal, Sunil Mittal, Godrej and many more exclusive interviews coming up from Davos as the World Economic Forum draws to a close. The rally continues across Europe as investors gear up for the ECB to open its liquidity tap. Major indices rise nearly 2%. Asian markets also surge. Wall Street wavers in early trade. Saudi Arabia's King Abdullah passes away at the age of 90, leaving the throne for his 79-year-old half-brother Salman. Crude prices rise in a knee-jerk reaction but stabilize later as the new king allays fears over a rift in the palace. Altotech reports steady set of third quarter numbers. Revenues rise over 16% in line with estimates, but profitability takes a hit due to higher tax rates and finance costs coupled with lower other income. Reprieve for GMR-run Delhi Airport in disappointment for airlines. The airport can continue to levy the current airport charges for the next 3 months, rules the Delhi High Court. From SUVs to lassi, chaas and dahi, the Mahindra Group plans to take its brand to the kitchens and dining rooms, set to get aggressive with its agro-commodities business. And we continue our countdown to Obama's India visit. Will pragmatism prevail in the debate over intellectual property, and will both sides move towards a totalization agreement? Expert views and analysis coming up. And we turn the spotlight on the world's slimmest smartphone. It's not Apple or Samsung. Chinese phone maker Vivo is making a splash.
Very large amount of investor interest in India.
As a regional matter, we focus primarily on three industry verticals.
My own sense is that the growth deceleration has bottomed out.
What I like about the way it seems to be happening in India is the sequencing.
India is increasingly attractive. Plus, the confidence that Modi really is going to start opening up the markets, dealing with some of the differences at the state level, getting the goods and services tax in place, that could be a real opener.
The mood here is India is back in terms of being a structurally strong story.
Well, the air is filled with optimism across the Swiss Alps as the World Economic Forum at Davos draws to a close today. Exclusive interviews with top business leaders coming up for you. Good evening. Thanks very much for joining us on India Business Hour. The Eurozone could be struggling, but news from the region has sent the bulls on a rampage on Dalal Street, and that is our starting point tonight. Records being shattered for the fourth straight day on Dalal Street as the European Central Bank's quantitative easing program got the bulls excited on the street. The Nifty scaling 8,800 for the first time, closing a % higher. Let's take a look at the Sensex, which gained nearly 300 points today, and it now sits comfortably above the 29,000 mark. It's all about the blue chips as the mid-caps continue to underperform. The mid-cap index today clocking marginal gains, but for more on the market action, Anuj Singhal is standing by. Anuj, 9,000 on the Nifty, 30,000 on the Sensex. Doesn't seem far away at all.
Well, 9,000 and 30,000 are just numbers now, which, we're practically there. But it was more of the same today. The blue chips led the way. The mid-caps underperformed a bit. really it's a big liquidity-driven rally which is propelling the market, and large part of that is going to index stocks at this point in time. The ECB move is something that the market tried to factor in yesterday itself, and today, of course, the market reacted, and boy, it reacted really in a big way. If you take a look at the Sensex and the Nifty, in fact, the Nifty ending above 8,800 and now within 180 points or within 200 points of hitting that 9,000 mark. Let's talk about some stocks today. It was not a sector-specific trend today. A lot of stocks gained ground today. So you had a Tata Power that was up 7%, DLF was up 5%, and Cipla was up 3.5%. Then you had stocks like Bharti, KN, two of the rank underperformers, actually coming back and making big moves. Hindustan Unilever, another 2% up move on that particular stock. Among the heavyweights, the support came in from 3 stocks. You had Larsen & Toubro, HDFC Bank, and Tata Motors. All these stocks were up between 2 to 4% in today's trade. There were some stray losers in today's trade, mostly on profit booking. Stocks like Punjab National Bank, GAIL, and BHEL, they were all down about 2% or so. Outside the index, there were some big winners, though the advanced decline ratio was in favor of the declines, but you still had big winners. Stocks like Spark, which was really the stock of the week, up some 70% this week. Adani Enterprises and Adani Power, both were up close to 8%. And on the losing side, you had some stocks like Suzlon, which was the top traded counter again, was down 7%. M&M Financials, which has been derated this week, down 20% or so. And India Cement, that was down about 3%. So clearly the steroids continue for the bulls, and at this point in time, it looks like even the last remaining bear has been taken out, and levels, as I said, have become meaningless. But next week is expiry week, and bulls would believe that the momentum can carry the Nifty towards that 9,000 mark.
Look, we've been positive on the Indian market for the last 2.5 years, and we've had our March 2015 Sensex target at 30,000 for a long time, and our March 2016 Sensex target at 36,000. I think we will continue to stick to those targets. We are reiterating March this year 30,000 and 36,000 for next year.
India will continue to attract a pretty decent share of the total amount of money going into emerging Asia equity markets from foreign institutional investors. There's been fresh money going into the Indian government securities market. We've had outflows from emerging Asia in 4 of the last 5 months. But in almost all of those months, in the second half of last year, there was still small net positives into India. So India is in a favoured position because of its strong fundamentals, and I think valuations are no longer cheap, but they're not particularly expensive either, so valuations are not really a strong barrier. Investors are looking for growth.
Well, that's the view on the Indian stock markets. Are we likely to see upgrades coming in? We're almost at 30,000 on the Sensex, and the target was that we could be at that number around the budget time. Now, it wasn't just the stock markets that cheered on Mario Draghi's larger-than-expected measures to prop up the Eurozone economy. In the currency market, the rupee strengthened against the dollar. It hit a high of 61.37 in intraday trade, a level that was last seen on the 5th of November. In fact, the currency finally closed at 61.44 to the dollar. That's nearly 0.5% stronger, and that was the trend that we saw across emerging market and other Asian currencies today as well. In fact, the ECB QE spurred Asian markets into a higher gear. The Japanese Nikkei rallied over 1%. The Shanghai Composite was up 0.3%, while the Hang Seng in Hong Kong closed close to 1.5% higher. The South Korean Kospi also ended with stock gains, and markets in the Eurozone continue to trade positive. The FTSE in London is higher by about 18 points. The DAX is about 1.5% higher. The CAC is higher by about 1.5% as well. It's given up some of its intraday gains, but shares on Wall Street tread with caution after the big rally that we saw last night. Major indices are trading flat as we speak, in fact now in negative terrain, so we are seeing some correction settling in there on the US markets. But news coming in from the Middle East: Saudi King Abdullah bin Abdul Aziz died at the age of 90 after he was admitted to hospital. He had been suffering from a lung infection. Now, according to a statement released early today, his 79-year-old half-brother Salman has succeeded him as the new ruler of the world's top oil exporter. Crude prices rallied in a knee-jerk reaction, but then settled once the new king allayed fears of any internal rifts within the palace. The new Saudi king has pledged to maintain existing energy and foreign policies and also moved quickly to appoint younger men as his heirs, providing a succession roadmap for the years to come. So Brent now at 49.41 and NYMEX at 46.30. Straight to our ongoing coverage from Davos. Finance Minister Arun Jaitley has defended the government's decision to hike duty on petrol and diesel 4 times over the last 3 months. Jaitley said some benefit has been passed on to the consumer and that oil companies cannot continue to suffer inventory losses. On disinvestment, the Finance Minister said a lot of action can be expected in the coming days. Hopeful of attracting investments to India, Jaitley said interest is high. Listen in.
As far as petrol and oil prices are concerned, the prices are coming down. I can't answer what will happen in future. But then, of course, there's a lot of benefit we've passed on to the consumer because the prices of petrol and diesel have been linked to the market. There have been reduction on 9 occasions. And therefore, that reduction on 9 occasions has been passed on by the oil companies to the consumer. Some benefit the oil companies have subsumed themselves not for profit, but the oil companies themselves have also suffered a serious loss on account of inventory losses. So they can't suffer a loss and pass on to the consumer. They buy at a particular price, but by the time the oil is sold, the prices have gone down, and therefore they lose in the process. It's for this reason that part of it goes to the oil companies. The government has independently raised revenue for the simple reason that we inherited a manufacturing sector which was either flat or negative. Sure. And the economy was not in the best of shape. And I have expenditure to meet. I have expenditure in the social sector to meet. Sure. Now, I can't cut down radically the social sector expenditure, so we need the money from some resources. So some revenue bridging has taken place on account of what we've collected from the oil company, from the oil revenue.
Would you have a rough estimate, sir, of how much you've collected via the taxes on...
You see, this came at the fag end of the year. It came in the months of December and January, and therefore you have only 3 to 4 months left. So it can't be phenomenally very high. But it gives me some breathing space.
Linked to that revenue-raising issue is the issue of divestment, the targets of which are fairly unmet at this point in time. As you said, you are constrained by poor tax collections this fiscal because growth has not been very good.
Well, I won't say these are poor tax collections, mind you.
Okay.
If you look at my income tax or direct tax growth, it has been significant, even though we are not passing through a fast-moving year. In the sense that if you assume that the growth is around 5.5%, the income tax revenues have substantially increased. It's the refunds which have created a problem for us. And therefore, I am also having to pay for a part of the past liabilities. Similarly, in the indirect taxation, some areas are doing quite well. Manufacturing was a challenging area. But we see an upward movement at least towards the later part of the year. That apart, as far as divestment is concerned, we are committed to our divestment program, and a lot of activity is expected. Now, which are the companies? I think the media speculations is hurting the divestment programs. The media's role as far as the divestment program is concerned has been highly speculative. And that speculation leads to market speculation. It's already happened and we have evidence to substantiate this. Therefore, as far as individual companies are concerned, I am absolutely in no position to share any detail with the media. But we are fairly committed to the divestment program and are going to go ahead with this even in this fiscal and also in the next fiscal.
Well, there's going to be a clamp down on all disinvestment stories, I can tell you that. But besides disinvestment, the finance minister is now facing challenging times over achieving the direct tax target as well. Data released by the finance ministry shows net growth in direct tax collections till December around 7% against the required growth rate of 15%. Now, if you go by this rate, the government now requires 25% growth in direct tax revenues to achieve the FY15 budget target. So short on disinvestment, short on direct taxes, and of course, they are going to be short on indirect taxes as well, but they have been able to shore up some of that unmet potential on account of the excise duty hikes on petrol and diesel. Let's get you all the other big news from Davos. Bharti Airtel has enough spectrum in all circles, barring one, and therefore it has a good fallback plan. That's the word in from Sunil Bharti Mittal, speaking on the sidelines of the World Economic Forum. He also talked about spectrum pricing ahead of the auction. Remember, the auction kicks off in February.
We did a big participation in the last round and have tanked up enough spectrum in all these circles, perhaps barring one. So we have got a good, nice fallback situation already built up on the spectrum that we picked up from last time. So in fact, we took more spectrum than what was required last time, just in anticipation to have very little pressure on this auction on us. So, but having said that, we would like to have more spectrum. Data is growing. Being the leading market player, Airtel needs to have more spectrum to serve its customers. So we will be participating, and we look forward to picking up some more chunks.
Are you expecting aggressive bidding? Will there be too much demand? What kind of spectrum pricing should we look at?
Hard to say. I mean, already the I think water table has been raised significantly from what TRAI has recommended. Our hope was that the government will go with the TRAI recommendation, which from our point of view are already high, and let the market determine the price. But it's clearly the government have decided to raise it up, and I don't see in at least some of the bands and some of the geographies the price is rising too much. But you know, bidding is always uncertain. You never know.
Well, at this point, don't anticipate unrealistic pricing there as far as the spectrum auction is concerned. That's the word in from Sunil Mittal. The SR Group has undertaken the delisting process for some of its businesses in the last few months, and Prashant Ruya, director at the group, says the economic situation in India in the last few years was the driving factor behind those decisions. He spoke on the sidelines of the WEF. He also talked about the concerns with regards to minority shareholders, and that being a consideration as well when it came to their delisting decision.
The company which we actually delisted was SR Energy from the London market. And again, you know, I think it was a bit of getting affected by what happened in India over the last 3 years, and especially in the sectors which we were, power sector, oil and gas sector.
But why delist at a time when things are looking up? You were delisting last year. So now you're doing that with SR Oil. Why?
So actually, SR Oil is more of a corollary of the SR Energy plan, and it was actually one plan because SR Oil is largely held by SR Energy. I don't know. We certainly felt that the kind of especially in London in SR Energy, the valuations were not in line with what the business should have demanded, and it was a strategic view from our point to take that company private.
It isn't that you prefer to be away from the scrutiny that public listed companies have to face, the regulatory issues. Is that what has driven your decision? Because I keep recalling this conversation I had with Mr. Shashi Ruya many years ago when he told me it's too difficult to stay listed in a country. There are too many questions asked of you. It's much easier to do business as a private enterprise. And at that time, I didn't know he was being so prescient. Now, in the last 6 years, I see you guys have pretty much fulfilled exactly what he was saying.
I think it's. I would certainly say it's true, especially if the public shareholding is a very small percentage. If you're, the minority shareholding, especially in the international stock exchanges, and now the Indian stock exchanges are following the international stock exchanges, but the minority shareholding and the rights which are being given are certainly becoming very onerous.
Well, from Prashant Ruya to Sajjan Jindal, he says he's all set to take the JSW Group to the next level. Speaking at Davos, he laid out the roadmap to ramp up his power business. He is set to pump in $4 billion to boost capacity.
As you may be aware that we acquired the JP.
Of course I do, yeah.
So our target now, we are at about 4,500 megawatts, and our target is to go to close to 10,000 megawatts. And so maybe through acquisition and through greenfield projects.
So how much roughly will you hope to acquire?
So probably another 4,000 megawatts we would be
through acquisition?
Through acquisitions, and the rest of it will be doing greenfield.
So are these again power plants that are owned by groups that are seeing debt distress and therefore are looking to sell?
Yeah.
So you're giving us a sense. Now we can start narrowing down who the potential candidates are who are selling. And what is the rough outlay that you see in terms of the kind of money you'll have to spend to acquire this additional 4,000 megawatts?
So basically we are looking at a very secured kind of a business where we have both ends covered with the coal mine and the PPA in place, and with a fixed return on equity. So therefore the outlay and all is not really of great significance, because we are looking at return on equity kind of thing.
Yeah, but it'll give us a sense of what your sort of capital demands will be.
Yeah, so it depends on some projects are lower invested, so they are cheaper, and some are high cost capital cost, but they are in a better place or better state where you don't pay transmission charges. So it all are not so straightforward, which I can tell you what is the real cost.
Okay, fair enough. Karnataka,
so it could be thumb rule could be billion.2 per megawatt.
Well, from JSW Group's power initiative to Vedanta now. We want to create an Indian natural resources giant which can compete with the likes of Rio Tinto. That's the word coming in from Anil Agarwal, the group chairman of Vedanta Resources. Agarwal was, of course, speaking at Davos, and he added that Vedanta is still working on the merger plan for Sesa Sterlite, Hindustan Zinc and Kane, and no decision has been taken just yet.
Recently, you floated this concept of wanting to merge Hindustan Zinc and Kane into Sesa Sterlite. Now, can you explain your rationale to us? Because the initial responses have been mixed.
We never, it's all on the drawing board, but India is such a big country. You need to have a natural resource company out of India.
But you do, right?
No. It's all fragmented. You have a Hindustan Zinc, you have a Balco, then you have a Kane, and we thought if we put everything together, it makes sense for the shareholder, and we are working on it. For that is required Hindustan Zinc shareholding to come from Indian government. Is required Kane approval, so we are working on it. There is no decision yet.
No, I understand that. In fact, you said also that you are likely, you've asked a consulting firm to help you think through this, and then once they come in with their report, you will consider it.
Yes.
There is some fear that the cash lying on the books of HCL and Kane will go towards, the rationale for the merger is the attractiveness of the cash lying on the books of HCL and Kane versus the big debt that Sesa Sterlite is currently burdened with. Would it be fair to say that's one of the key drivers for why you're doing this?
See, we are the only company in India who has put the focus on natural resource. Otherwise, we would have been all the time importing these. I'm working very hard to make sure India produce metal. We import $500 billion of import, and mainly these are the metal, gold, oil. And I'm focusing on that. I'm doing whatever I can do. And this government, I'm very hopeful. They believe in the manufacturing. They believe in finding in India, making in India, consuming in India. So I'm looking with the nitty-gritty. I'm sure my CEO, we have one of the best CEO who has come in. We have the best of team. We have the best of consultant. We'll do everything possible to create the shareholder value.
Well, that's Anil Agarwal speaking about the need to create a natural resources conglomerate out of India. And staying with the Vedanta group, hit by the mining ban in states like Goa and Karnataka, Vedanta Sesa Sterlite is hopeful that the amendment to the Mines and Minerals Development and Regulation Act will put an end to the current impasse. Sesa Sterlite plans to enter the steel business in the long term, but in the short term is awaiting regulatory clearances to resume mining. Anshu Sharma spoke exclusively to Vedanta's CEO Tom Albanese to bring you this report.
Almost 2 years after the mining ban was imposed in Goa, there is hope in the air. Sesa Sterlite, which produced about 15 million tons of iron ore prior to the ban, was the hardest hit and is now betting on the amended mining regulation to break the impasse.
Well, I'm supportive, first of all, of the broader amendments in the ordinances. And the reason for that is that what we've seen over the past several years is that the mining industry has been virtually at a standstill with regard to the previous allocation system. And I think there's been a breakdown of trust between the public sector and the private sector so that something has to be done differently in order to assure that there's transparency in any publicly owned asset, i.e. a mineral lease being transferred to a private company or a non-state-owned company.
Even before the MMDR Act was amended by the central government, the state government of Goa renewed more than 87 mining leases, but mining is yet to start. The delay in resumption is on account of environmental clearances.
We'd like to resume as soon as possible. For us, there are 2 or 3 things that still need to be considered, but we'd hope to be in a position to be resuming mining within a month or 2.
And to add to its woes, Sesa Sterlite's Karnataka mines, which produced about 2.6 million tons of iron ore, have been shut since June of 2014 due to lack of environmental clearances.
Well, I think, first of all, I want to see iron ore mining resuming in Karnataka. And we've had a set of restrictions on that in the first instance. India needs the steel. And we'd like to be in the iron ore business in Karnataka. And we see ourselves being positioned to produce not only iron ore in Karnataka, but also steel for that point in time when India is going to be not demanding 70 to 80 million tons of steel a year, but 250 to 300 million tons a year. And those are the investments that we need to start making now so that we're positioned for that future steel industry.
Miners like Sesa Sterlite are desperately looking for a cut in the export duty on low-grade iron ore in the upcoming budget. Companies claim the cost of low-grade iron ore in the global market is equivalent to the cost of production, and a further squeeze on margins will make the business unviable. Miners are also hoping that the government will lift the cap on mining to hike iron ore production.
It makes good sense for India to be seen to be exporting that product, generating foreign exchange, generating taxes, generating jobs, even in this low-price environment. So that would require relief for the lower-grade products from those export duties.
While the Steel Ministry is lobbying for a cut in duties, the Finance Ministry may find it tough to oblige. In New Delhi, with Anshu Sharma, Ashmit Kumar.
Well, on that note, it's time for us to wrap up this edition of India Business Hour. Remember, we're going to be live on CNBC TV 18 with President Obama's arrival and, of course, the India-US dialogue. The summit will kickstart on the 25th. Through the day, we'll be joined by ministers like Ravi Shankar Prasad, Jayant Sinha, Nirmala Sitharaman, Suresh Prabhu, and many, many more. So stay tuned to CNBC TV 18 through the weekend and, of course, the 26th of January as we cover all the highlights of President Obama's historic visit to India.